Okay, so as usual, we're just going to go through the market, see what the market has in store for us today, and following that, to take any questions you may have regarding trading on the platform. Okay, so as usual, we start off with the economic calendar. So let me just bring the economic calendar up. So today's Tuesday, the 23rd of February. And the main market, as usual, that we're looking at is the Euro-US dollar. So we're going to be looking at reports that could affect the Euro or the US dollar. So that's what we're going to be doing today. So let's have a look. Today is 23rd of February, Tuesday. The time zone again is the Rwandan time zone of GMT +2. So the times I'll be quoting are GMT +2 times. So let's see what's coming up today. So the first report we have is at 9, which is the UK employment change, which that's a report of high importance. That would mainly have an impact on the UK stock market and currencies paired with the pound. But obviously it could have an indirect impact on the euro and the US dollar in view of the UK being the financial capital of the world. So let's see what else is coming up. We'll see, we just ignore all the reports of low importance. And then at 12 noon, again, Rwandan time, at 12 noon Rwandan time, we have the euro area core inflation rate. And of course, we know inflation rate report is of very high importance. And of course, we trade in the euro-US dollar. That's going to have a huge impact on the euro and hence the euro-US dollar. So that's at 12 noon. And then at 5 o'clock, again, Rwandan time, we have the CB Consumer Confidence Report due out of the United States. And that's the last report of high importance today. So the last report of high importance today is at 5 o'clock, which is the CB Consumer Confidence Report due out of the United States. Let's just have a quick look at what's coming out for the rest of the week before we concentrate on today, because again, today, we might need to do things a bit unusual today, but let's first look at the rest of the week. So the next 7 days, let's see if there's anything major, especially interest rates that could be coming out the rest of the week. So tomorrow, the 24th, we have the New Zealand interest rate, but of course that won't affect us. If that was the US or the European interest rate decision, then yes, but not New Zealand. Tomorrow we also have the German GDP growth rate, but again, that won't stop us trading today. And that's Mexico. And then we have the US GDP. So yeah, we've got some reports of high importance coming out for the rest of the week, but nothing that would really stop us trading as normal on a daily basis. But let's go back to today. Now, today, again, as usual, you want to wait till the last report of high importance before you trade. So the markets tend to trend sideways prior to the last report of high importance. That's what usually transpires. And today, the last report of high importance is the US Consumer Confidence Report at 5 p.m. So ideally, you'll want to wait till 5 p.m. before you place your first trade. But today, specifically, you can see at 12 noon, you have the euro area core inflation rate report. Now, of course, this inflation rate report is of extremely more important than the consumer confidence report at 5. So there's a likelihood that this reported 12 noon could move the market because it's way more important than the reported 5. So in this scenario, obviously I will first wait for 12 noon. I will not place any pending orders prior to 12 noon. And then just before 12 noon, I'll assess the markets, place my pending orders, and then trade around 12 noon. I'm not going to wait till 5 p.m. because this report is way more important than this report at 5. But if I place my pending orders just before this report and my order is taken and I'm in a live trade after this report, I would have only one live attempt prior to 5. So if the market takes my order and I'm in a live trade, if I lose out on that live trade and I have one losing trade, I would not have, my second attempt would be at 5 o'clock. So I only have one attempt prior to 5. Okay, I hope that makes sense. So I will not place any pending orders now, leave the market alone, reassess the market about 10 minutes before the report at 12 noon, see what the market is doing there, place my orders just before the report. If my orders are not taken and the pending orders are there, they're not taken prior to 5, then fine, nothing to do. I'll just leave them alone. But if one of the orders are taken between 12 and 5, if the buy order is taken first, I'll delete the sell order. If the sell order is taken first, I'll delete the buy order. I'll just concentrate on one live trade. If I lose out on that live trade, I will then stop trading and wait till 5 before I have a second attempt. Of course, if you make your 60 pips, that's fine. Okay, so like I say, I hope that makes sense. So that's the plan for today. Again, don't forget to have a look at the financial news to see if there's anything untoward going on that could create uncertainty in the market. At the moment, there's nothing crazy going on. We still have, obviously, the COVID issue, but that's nothing new. We have the disaster going on in Texas, but again, that won't affect currencies. So nothing major causing uncertainty in the market. So we can go to the charts now. Let's have a look at the charts. So we'll start with the swing trading. Excuse me. So with the swing trading, the market is still trending sideways. You can still trending sideways between those two white lines. So like I said, I'll just continue to observe from a swing trading point of view until the sideways trend is broken. Then once the sideways trend is broken, then I'll begin to decide what to do and where to possibly place my pending swing trade order. But till then, I'm not placing any orders from a swing trading point of view. I'll just watch and wait while it's still trending sideways. So let's go to the 5-minute time frame for day trading. Now, I'm going to do something unusual today. Again, if if you don't understand what I'm about to say, then just don't follow it. Okay, don't follow what I'm about to say. You know, it's always easier to do what you're comfortably doing as a trader and stick to your plan and do what you're comfortable doing. Don't do what you don't understand, or don't do what you find confusing. That's very important. So for example, yesterday we had this buy trade where we entered at that point. That was our entry level. Market went up to 30 pips. We've moved our stop loss to the opening level. And then this morning it hit the 60 pips mark. So that's ideally what you want to do with your trade. Just capture your 60 pips, make your money, take your money and go away. Just leave the market alone. Okay. But again, that's the beauty about trading, is that, like I've always said, even during the course, and I'll keep on saying, there are 1,000,001 ways to trade. There isn't just one way to trade, but the key is that whatever strategy you adopt, whatever you do, make sure you have a full understanding, pros and cons of what you are doing. Okay. Now, the beauty also about trading is once you understand all the elements of trading and the basics of trading, then you can then play around and mix and match your uh, strategies and your methods based on your understanding of the market. So, for example, here, this is the day trade from yesterday, which I'm still in the live day trade. But because, again, like I said, if you find it confusing, just ignore it. Don't follow this. Okay. But this is what I tend to do sometimes. So if I see that the market is trending up and there's a bit of momentum to it, I will remove my stop loss and see if I can milk it for as long as I can, and then just move my stop losses with using certain key points in the market. So for example, you can see I've moved my stop loss from the opening level to just below the pivot point. So that's just a technical point in the market to say, okay, if the market falls back down, at least I will make whatever amount of pips between here and here. But if it continues to go up, I could possibly make some more, capture some more pips. This is another potential place I could move my stop loss to, because you know this is the previous low here. Of course, it's gone up from other low points, so I can move my stop loss again to that low point just to capture some more pips. But again, like I said, if you don't do what you're not comfortable doing, all right? I just wanted to explain, because you might be wondering why I am still in this day trade from yesterday, why I am not out since it's already hit the 60 pips point. But I'm just explaining, I'm now just combining a range of basic points and using certainly what we call technical stops instead of my 60 pip stops. So the first one is to move it to this. And then if the report comes out and the market continues to go up and it possibly gets to R2, then I might move it to my stop to just below R1 and just keep playing around with it like that. But again, I am fully aware of the danger, because again, this is why I'm saying don't do what you're not comfortable with, because you can see here, the person here who are just taking their 60 pips, they've already banked their 60 pips, they're out, they've made their money. You can see the market is now coming down. So it might actually come all the way down. And as you can see, my stop loss is actually below the 30 pips point. So instead of making 60 pips, I would just end up making 20 something pips instead of making 60. Again, that's the danger I'm aware of. That's the risk I'm prepared to take. So if you know you're going to be crying if that happens and you're kicking yourself that I should have just taken my 60 pips, then like I said, don't do this. Okay. So, you know, like I said, you need to be aware of the pros and cons. But again, this is just to show you that, you know, there isn't a one way to trade. But the bottom line is that whatever you do, make sure you know the pros and cons, and you won't just be kicking yourself, because again, you can't trade in hindsight. You can't trade in hindsight. Abimbola, you said, actually, unmute yourself. I don't understand what you mean.
Morning, morning, Manny.
Morning.
So, yes, this is exactly what happened. So yesterday, first of all, I didn't really know where to move the stop loss to. And then Bola talked me through moving the stop loss to my opening.
Yeah.
But I really didn't understand how to do it. But essentially, I moved the stop loss, and then the market, what I thought was that if I move the stop loss, it protects the profit that I've already made. But then the market went down. So I think I moved the stop loss when I was probably up about £15. But then the market dipped, and then I think I ended up, it took me out probably at about £5.
Yeah.
And I couldn't understand why, because I thought I was protecting the profit that was already there.
No.
So I'm not sure that I understand how the stop loss works properly, and then where to place it. So, exactly what you're sort of explaining now.
Let me explain again. But again, this is actually why I stress that, keep it simple when you start trading. Don't try and complicate it at the beginning. So that's why I kept emphasizing that when I was saying that I'm just saying this, but if you're new to trading, keep it simple first, because all these things come naturally. Once you start getting used to moving your stop losses, knowing what you're doing, very comfortable and understand what you're doing, you can then start to play around with it. But you can't play around with it if you don't understand what you're doing. So that's why I emphasize that. But let me explain what I mean again. So actually, we'll use this as an example. Actually, let me go back here. So you can see here, the entry price was 1.2115. Isn't that right? Abimbola, you can unmute yourself.
Yeah.
Okay, so you can see the entry price from yesterday was 1.2115. Isn't that right?
Yeah.
Okay, so let's use that. 1.2115. 1.2115. So 1.2115. So that was the entry level. I'll just put that EL. So if that's the entry level, stop loss will be 1.2115 minus 20. Let me bring the calculator out. Stress myself this morning. Okay, so that's, sorry, cancel. So that's 2115 minus 20. So like I say, just keep it simple like this for now. So that's 0.095. 2095. So that's 1.2095. And your profit limit will be 1.2, that will be plus 60. So this is minus 20 plus 60. So that will be 1.2175. Okay. Are you okay so far, Abibola?
Yes, I am, yeah.
Okay. So let me go back to the platform, actually. So I'm going to be going back and forth, because we'll do it step by step. But like I said, this is the best thing to do to start with. So I'm just going to assume now we're doing our stop loss at 2095 like we've done. So at the moment here now, I'm risking 20 pips. Isn't that right, Abimbola?
Yes, yeah.
Okay, I entered at this point, and in fact, it's good here. So you can see the market took the order there, fell back down, but didn't get to the 20 pip stop loss and kept going up. So at this point here, like I always say, I'm happy to lose 20 pips. So if the market goes back down here, I will lose 20 pips. That's it. Okay, now, like we said, once it gets to the halfway point, which is at 30 pips, at that point, I will move my stop loss to the opening level. Yep.
Yes.
So it's gotten to the 30 pips there. So I'm going to move it from here to the opening level. So you see the opening level is 1.2115. You can always see it on the platform. So I'm just going to change my stop loss from this 20 pips I'm risking to the entry point. So I just right click, modify, and change that to 2115, which is my entry level. And so you can now see my stop loss and my entry level are exactly the same.
Right, okay.
So if the market falls back to this level, I will not make any money, but I will not lose any money.
Right.
Okay, so you can see, like you rightly said, now, even though you can see I'm making $25 here or 25 pounds here because I'm doing 50 p per pips. So this is 50 pips. So although this is showing you 50 pips, doesn't mean you're making that money, because if the market falls back down here and takes me out, I would have made nothing.
Okay.
So the fact that you're saying 25 pounds here doesn't mean I've made that money. I've only made it if I close the trade now.
Right, okay.
Okay, so that's why I said stick to your profit limit, because if you had left your profit limit and not removed it like I did, the market would have taken that 60 pips now, you'd have made your 60 pips profit. And if you're doing 50 p per pip, you'd have made your £30. You're done, you're out, finished.
Mm.
Okay, so the fact that you've now moved your stop to the opening level here, you are not protecting anything. So this £25 is not protected. If the market falls here and comes down and takes me out, I won't make any money. I would have made nothing.
Right, okay.
So that's why I said, although I'm going to take it a step further to what I'll explain. So that's why I say for beginners, just keep it simple. Set your stop loss, set your profit limit. When the market moves to the 30 pips level, move your stop loss to the open level, leave it alone. And then the market will either get down here, take you out, you lose nothing, or go up, hit your 60 pips profit limit, like in this case, to take you out, you would have made your profit. Nice, simple, not complicated. Isn't that right?
Well, I'm not sure that I'd say with practice, probably simple, but at the moment it's not quite.
But that's why I'm saying that for now, when you're placing your orders, and like I say, if you're new to trading, for now, just do that. Like I said, when you place your order, you place your buy order, put in your entry price, your stop loss, and your profit limit. Because once you've done that, you've left everything on autopilot. Then you don't have to worry. Because let me go back to the whiteboard. So this is what I'm saying you should do when you start. You put in your entry level, put in your stop loss, put in your profit limit. You understand that bit?
Yeah, that I get. Yeah.
Exactly. And that's what I'm saying. As a beginner, just do that. No more, no less. The only thing you should...
I was trying to be smart.
Exactly. So the only thing you should just add to this, when you're placing your order, you place your order to your entry point, put in your stop loss, put in your profit limit. The only thing you change is when the market moves halfway, then you just move your stop loss to the entry level, period. And that's all.
Okay.
Don't do anything else. So at this point, like I said, the market would either fall back down, take you out, you make zero, or it goes up, takes your 60 pips and you make 60 pips.
Right. Got it.
Yeah. So that's why I'm saying that's the one you should do, or advise everyone to do, and just get used to that first, So in this scenario, if you had done that, you would have made 60 pips. Okay. So I'm just saying that, yes, there's another scenario, which is what I'm doing now, where I removed my stop loss. And again, like I said before, I'm just saying this, but if you find it confusing, don't do this. Just take your 60 pips and go. But this is where locking in your profit comes in, Abimbola. So like I said, I've removed my stop loss, my take profit, sorry, because I want to ride this market. But I'm aware I might end up not even making 60 pips. I might make much less, but I'm happy to.
Does that mean that in the order window, your take profit was 0?
Yeah, you can see it here. You can see it here.
Okay.
You can see it's 0. You can see take profit here. It's nothing there. It's just 0.000. I haven't filled it in.
Okay.
So, but this is where you want to lock your profit. This is where that comes in now. So you can now see, let me go here. Actually, let me use this as an example. So like I said, I want to use a technical point here. So I'm now going to move my stop loss from the opening level to just below the pivot point. The pivot point here is 1.2141. So I'll move it to 1.2139. Just below the pivot point. So my stop loss now be 1.2139. Okay. Isn't that right?
Yeah.
Okay, so let's go back to the whiteboard. So that's 2139. So I've now moved my stop loss to 1.2139. So that means if the market falls back down, it would take me out at this level, at 1.2139. But my entry level was 1.2115. So I would have made whatever profit is between 2115 and 2139. So let me do the maths. I should really improve my mental maths, but anyway, I'm too lazy. 2139, 2115 minus 2115. So that's 24 pips. So this is what you mean by locking in your profit. So now I've locked in 24 pips. So again, let's go back to the charts. So again, I've only locked in 24 pips. So although you can see technically I've made 50 pips here, showing because it's 50 pips per pip. So this is about 24 pounds is 50 pips. So although it's showing 50 pips here, in reality, the only real money I've locked in is this 24 pips here. So if the market, if it falls back down, if it takes me out, I would have only made 24 pips on this trade.
Okay.
Not what you're seeing here. Okay, but again, this is why I said that this is, but like I said, this is, like you rightly said yourself, with practice, once all those things become second nature to you, you can begin to mix and match. Because I know very well the market could fall back down, take me out, and I would have only made 24 pips on this trade instead of 60. But I'm not going to be upset because I am fully aware of that. Are you following me?
Yes.
So that's a risk I'm prepared to take. Now, if you're sort of person that if you see that happen and you say, oh, I start to cry, now I should have just left it at 60, then don't do it. Because you can't do it in hindsight. Because I don't know what's going to happen. The market could still shoot up and I could end up making 100 pips on this trade or more. But it could just fall back down now and I'll only make 24 pips. But again, I'm fine with that. So again, this is where it just shows that when it comes to trading, you can really play around with a lot of ideas. But again, it's really based on your experience and that's actually why the basics of trading is very important. Because once you understand the money management, you understand what you're risking, you're happy with you're happy with the worst case scenario. Once you're happy with the worst case scenario, then that's fine. The best case scenario here is I should have made at least 60 pips. But the worst case scenario, I might end up making only 24 pips instead of 60 pips. I'm happy with that. If you're not, don't do it. Just take your money out. It's a bit like what I say too also. This is why sometimes with trading, there's a lot of discretion that comes to it. Because again, too, like I said like last night, and I always say that too, now, even with day traders, again, that's a decision you need to make on a regular basis. Because last night, the market hadn't reached 60 pips last night. It was just there. It hadn't reached 60 pips last night. But again, some traders would just close out last night at that point. And that's what they will do on a regular basis. At the end of the day, wherever the market is, they will close it. So again, that's a decision you have to make. That's why I said there's really no hard and fast rule in trading, but it's you understanding what you're doing. So strict day traders, like I said in the post yesterday, that's now the end of the trading day. Strict day traders can now close all their positions wherever the market is now. But like I said, I personally, as usual, I always let my trade run over to the next day to see if we will get to the 60 pips. I just move my stop loss to the open level and leave it to run to tomorrow. But that's what I always do. And if you're going to close your trade at the end of the trading day, then that's what you should always do. So then that way you're not, mourning in hindsight. Because again, you could have closed your trade here and made like 50 something pips. Instead of 60 this morning. But again, you're aware of that, you don't worry. But again, it's all like me that I didn't close it at 50. You could wake up in the morning and just find it's fallen back down and you made nothing. Again, I'm happy with that. Are you following, Abimola?
I am.
Yeah. So there's no perfect way, but it's just you understanding the pros and cons of whatever you're doing. But the principle is still the same. Money management, know what you're risking, know the downside, know the pros and cons, and then be consistent with whatever you're doing. So it's not for me to say, oh, today I'll close my trade because I didn't like what happened yesterday. And then I keep chopping and changing because that's where your emotions come in. So if you're going to close your trade at the end of every trading day, you always do that. If you're going to let it run to the next day, you always do that. Knowing that sometimes it works, sometimes it doesn't.
Thank you.
Okay, pleasure. Bola, you have a query about stop losses.
Yeah, so good morning, everybody. So I want to bring in a different kind of dimension. So a couple of weeks back, I was struggling with stop losses, and eventually we did a session and I understood it. So what then happened was that I was trading and the market was going up. So initially I moved my stop loss to the opening, and thereafter, when I noticed that the market was trending upwards, at every point where I could move my stop loss, I moved it to follow the market. So I would move it so I was using the pivot points as my entry point. So I kept moving my stop loss until at one point the market got up to 28, very close to 30. And I think I moved my stop loss on the pivot to the pivot that was just slightly below where the market was at that point, and I left it there, and then it took me out. So I think on that trade I made about 24, 25. Now, two things. Initially, I was laboring on the point that when you are moving your stop loss, that just like what Bola said, I was looking at the trade banner, where thinking that was where I was making my gain. But for what you've said now, I can understand that the profit that you make is the difference between wherever your stop loss is and wherever you've placed wherever you've modified it on the pivot point, if that makes sense.
Yeah. Your profit is wherever your entry point is, the difference between your entry point and wherever your stop loss is.
Yeah. And then the second thing, because basically I was doing profit by stealth, just looking at it and moving it. So not necessarily using the opening level, but using various points along the pivot point or just above it, whichever one of the pivot points, to kind of move my stop loss to. So that was my style, and actually it did work, and that was what I was doing. Yes, I don't know whether that I was just lucky or if that style and understanding of mine was correct.
You will know with time and experience. But what you said is actually good, because it just shows what you've just done shows that you can really do anything when it comes to trading once you begin to understand what you're doing. The rest will just come with experience to see whether, if you do that on a consistent basis, whether it's a good thing or bad thing, which is only time will tell. So, for example, yesterday is actually a good example. So you can see yesterday. Can you see this chart well, Bola?
Yes, I can. Yes,
Okay.
I can. Thank you.
So yesterday is actually a good example. So you can imagine if you were doing that, moving your stop with the pivot points. So you can see it went up, got to R1, so you could have moved it to below the pivot point. Isn't that right?
That's right, yes.
Okay. Then it went up to R2, isn't that right?
Yes, that's right, yes.
Then you could have moved it to below R1.
That's exactly what I was doing. That's what I was doing.
But you can see you would have now be taken out, and you'd have missed out on the 60 pips.
Yeah, and that exactly is the question I was going to ask. And that's what happened to me yesterday.
Exactly.
Because when Bola and I were trading, at one point I moved it to the pivot point, and then I said, it will take us out too quickly, so we're not going to have an opportunity to aim for that 60. So let's move it below. I mean, it still took us out fine, but that was exactly what I was thinking. And that is the danger I know with the approach that I am taking. I recognize that, but I think for me, because this happened too many times, when it gets to 28, it will suddenly drop down. You know what? Let me get that 28. So let me secure at least 25, 26, but rather than waiting to hit that magical 30 and it keeps taking me out. So yes, I do recognize that risk, that when the risk with what I'm doing is that you may lose out on that full 30 pips, because obviously we're
60.
or sorry, the full 60 pips,
Yeah.
you may well lose out on it. But I just thought to myself, you know what, half bread is better than none. That was the strategy that I was using, especially because I wasn't ready to be glued to the laptop from morning till night.
Yeah.
So yes.
I mean, you've got that spreadsheet we shared during the course.
Yes, I have.
Yeah. So this is actually the good thing about what we said. In fact, now you're beginning to see how all those basic things we discussed in the course come in. So you can now monitor what you're doing over the next, couple of months using the spreadsheet, and then see, what transpires, whether in the long run this is a good idea or not.
Okay.
In fact, I'm happy with what you said, because that's exactly what I just said, what I'm doing here. So with what I'm doing, although I don't move my stops very quickly like you guys did, I wait till it gets to 60 pips before I start to play around with it. So it's only this morning I moved my stop loss to below the pivot point. I left it at the opening level till today. So I didn't do it till this morning. So that's the only difference between what you did and what I did. I just give it a bit more time, because again, with experience, I know the market will just be up and down. Just let me just leave it alone. And when I have enough room, by the time it gets to 60 pips, then I start moving it, and then I'll look at an appropriate place to put it. But like you two rightly said, Bola, and like I said earlier, I'm fully aware that instead of making 60 pips on this trade, I might end up only making 24 pips, and I'm happy with that. So just like you two. So I'm aware of that risk. And you could see later today when the report comes out, the market just falls down, but I'm not going to kick myself, because I'm aware that that's a possibility.
Yeah.
Yes.
Yeah, that's good. Yeah, so yeah, because where I was getting very confused was this whole issue around the opening level. But I guess the opening level for someone like me would be applicable only if I've just moved it to that point and I have no intention of moving it again. But
Exactly.
Again, for me, now that I'm understanding it more, that opening level is just my starting point. I'll be tracking the market and seeing where it's. I'll be moving my stop loss with the pivot point. Yeah. So that's my trading style. That's my trading style.
Well done. I like that, because it shows you that, that's a very good example. Like I said, that once you now understand this basics, you can start to play around with things. But while you're playing around with things, make that observation to see whether how often do you do that and you miss out on 60 pips, that kind of thing. So this is what you now have to start observing yourself.
Yeah, that's very true. That's very true.
And then so that then you can then make an objective assessment for yourself after a couple of months. So for example, now, if you find you move your stop loss, and maybe when you're doing that, you only missed out on the 60 pips once or twice in 20 times you did that, if you know what I mean.
Yeah.
Then you might say to yourself, okay, I don't mind missing it once or twice, I'll just keep doing that. Now, if you monitor over a couple of months and you find out that you keep doing that, and maybe 6 out of 10 you've missed out on 60 pips on 6 out of 10 times, that's a lot. You might now say, this is not worth doing. I'm losing out. I'm leaving a lot of pips. I'm losing out on a lot of pips by doing this.
Yeah.
So this is where, again, this is why I always say to people at the beginning, that this is where experience comes in, and you making that, if you start to play around, that's why I told people that the trading plan I gave you all is a good way to start, to give you that foundation to start, because it's simple, it's straightforward. It's on autopilot, set your stop loss, profit limit. You don't have to rack your brain too much. But like I said, if you now want to change it, which is like what you're doing, which is perfectly fine to do, start to monitor what you're doing.
Yeah, I like that. I didn't see it from that point of view, but definitely I will be monitoring that. It's just like the city market hasn't been going. It's been trending sideways most of the time. So there's not been that many opportunities over the past. It's almost been like 6-7 weeks now. It's just been trending sideways majority of the time.
Yes, because we still live in a period of uncertainty, unfortunately, because it went from one bad. I think ever since about October Yeah, but October, because obviously October was leading up to the presidential elections and the animosity in the presidential elections. Then after the presidential elections, you know, we have the vaccine and the madness of the vaccine and so, you know, the whole world is all upside down now, which obviously reflects in the market being all over the place. But again, this is where having your plan, your money management all comes in. Again, like I was saying before, is that even despite, as you all know, I put in £500 in this account in October. But yes, I'm still got £365 in there and I'm still trading despite the madness since October because of money management, because of discipline, because of consistency. I haven't wiped it out.
Yeah, thank you. Thank you very much. That's been very helpful. Thank you.
Pleasure. Isaiah, what are the best times to trade other currency pairs? Isaiah, are you able to unmute yourself? Hi. Long time no see, Isaiah. I guess if in terms of, I hope you can hear me though, Isaiah, but anyway, I'll answer your question. In terms of the best times to trade other currencies, again, it's up to you. If you go back to the teaching, there isn't a specific time for any currency because people in Asia are trading the euro, people in euro are trading Asian currencies. So from, like we said, using the UK time frame, you can really trade any currency pair between midnight and 9 p.m. UK time. You can trade any currency pair. That's just a basic thing because it's not as if Asian people are only trading Asian currencies or British people are only trading British currency or Americans are only trading American currencies. So anybody, anywhere. In fact, it's just like me in Africa. We are trading all of them. So you can trade any currency pair at any time between midnight and 9 p.m. Again, like I said during the course, between 9 p.m. and midnight, all stock exchanges around the world are closed. So the market tends to trend sideways, all of them between 9 p.m. and midnight UK time. But when it comes to specific currency pairs, like again, we said, because we are trading the euro US dollar, that is why we are trading at the times according to the reports. So for example, now, let me go to tomorrow. So you can see tomorrow at 3 a.m. Rwandan time, if I was trading in New Zealand dollar, then I'll be trading at 3 a.m. Rwandan time tomorrow morning if I was trading in New Zealand dollar, US dollar, because of this report coming out from New Zealand. So it depends on, so it's the economic reports that will also determine what time you're trading. So obviously, if you're trading the euro US dollar, you don't have to be waking up at 3 o'clock in the morning to trade this report. But yes, and I used to trade in New Zealand dollar. I still sort of trade it, the New Zealand dollar, US dollar. I mean, that's why you can see it's on my platform, New Zealand dollar, US dollar. So if I happen to be up tomorrow morning, I might just trade it, or I can set the alarm. But yeah, so it depends on the economic reports coming out relevant to the currency pair you're trading. So I hope that makes sense, Isaiah. So, but yeah, if there are no reports coming out, let's say, for example, again, I'm trading New Zealand dollar, US dollar, and there are no reports coming out, no public holidays again in USA and UK, I could technically trade the New Zealand dollar from midnight. So yeah, so it doesn't matter what currency pair you're trading. If you're trading Aussie dollar, like you said in your question, then you're looking out for reports of high importance out of Australia and USA. If you're trading USA and Canadian dollar, you're looking for reports of high importance out of USA and Canada. And that will determine what times you trade in relation to economic reports. If there are no economic reports, hey, you can trade it from midnight. What is leverage? Leverage, actually a good way of, let me go back to the whiteboard. I think property is actually a good way of explaining leverage. because most people understand property. So if you want to buy real estate, so let me start with property and then we'll go to currency. So if you want to buy a house, let's say this house is worth £100,000. So this house is worth £100,000. Now you only have £20,000. So this is you only have £20,000, but you want to buy this house worth £100,000. So you go to the bank and you get a mortgage of 80,000. Okay. So you only had 20% of the value of this house, and the bank gave you 80% of the value. So you now own this house. So you bought, this is what leverage is. So you are able to buy this house using the bank, using a leverage of 80% to now own a £100,000 house. So with £20,000, you were able to secure an asset worth 100,000. Now, if you're lucky and the property goes up to 120,000 profit, so if you sell it, if you sell it at 120,000, you can give the bank back the 80, and then you have 40,000 left. So you probably made a profit of 100%. So you made a profit of 100%, but you only used 20% to buy that asset. So that's what leverage is. Actually, I shouldn't have. Let me quickly just draw that again. So the house is 100,000. You only put 20,000, and the bank gave you 80,000. So that was the leverage. The bank gave you that leverage of 80,000 for you to buy this. So when it comes to currencies, it's the same thing. So like we're just saying now, we're buying the euro US dollar at 1.115. That's at what level we bought the euro USD. So we bought it at 1.2115. Okay, that's why we bought the euro USD. Now that means, again, this is going back to the basics of trading, and I hope you all still have the recordings and the handouts from the courses, because this is going back to basics. So €1 is going to buy you, this means that €1 is going to buy you 1.2115 US dollars. Now, in this scenario now, let me quickly go back to the platform. Okay, so the market is currently at 1.2166, 1.2166. That's where the market is currently at now. So it's now 1.21666. But you can see it's at 1.2166, but it shows you on the platform making £25 because I'm doing 50p per pip. Now, without leverage, with the market going from €1 is equal to 1.2115 US dollars, if you buy it at this level without leverage, now that it's gone up, what's this? 6 minus 5 is 1. 6 minus 1 is 5. 1 minus 1, 0. 2 minus 2 is 0. And 1 minus 1 is 0. So it's only gone up by 0.0051. So if you had just bought €1 worth of this, and it had gone up this same level as you've seen on the platform, you would have only made €0.0051. Of course, if you paid €10, then you'd have probably made my maths, 1, 2. So if you bought €10, you would have just made you divide this by 10. Oh gosh, let me just get the calculator out if I give myself a headache. So that would be 10 times 0.0051. 10 times 0.0051. So you'd have made 0.051. You'd have made if you had bought 0.051 profit. So you can see without leverage, the amount of money you'll be making with this currency movement will be tiny. So for you to make a decent amount of money, you probably would have had to spend, let's say, $1,000. So let's just use $1,000. Let's change this to 1,000. So with 1,000, so 1,000 times 0.0051. So even with $1,000, you would have only made €5 profit. So even with 1,000, if you had bought this with $1,000 and made this same movement, you would have only made €5 profit. But you can see with me just risking a tiny bit of money, and with the leverage the platform is giving me, I'm able to make £25 on that same movement. As someone there without leverage wouldn't even make £25. Someone that's without leverage, even using £1,000, will only make like £5 profit. So basically, what the trading platform comes in to do is what the banks are doing here. So the bank, when you're buying the house, when the bank give you this money so you can buy this 100,000 house, that's leverage. And this is where the trading platform too comes in to give you that leverage to be able to make a lot of money on trading currencies with a small amount of money. So all these tiny movements you're seeing now, you're making pips. And like I said, obviously I was using 50p per pip. If I was using £1 per pip, I'll be making £50. If I was using £10 per pip, even just with the same amount of money I have there, I'll be making a lot more money. So that's where the leverage comes in, whereby you can make a lot of money from this tiny movements in the market. But you can see without leverage, you will need to spend hundreds of thousands to make the same amount of money I am making with leverage. I hope that makes sense, Isaiah. Okay, good. Your mic is playing up, but that's okay. So long as it makes sense. Brilliant. All right, any other questions? So on this basis, how do these platforms have so much money for leverage? Most of these platforms, again, I should say, well, I was going to say luckily. I don't know whether it's a lucky thing or not. Like I told you guys, when I first moved to Nigeria, my partners and I, we owned our own online brokerage firm, DKB Markets. So I used to own a brokerage firm myself. We had clients like IG and CMC Markets. So I used to own a brokerage firm with my partners. So that's how we know that's how I know how the back end works. So usually with most of these brokerage firms, they're backed up they get liquidity from most of the financial houses, like Barclays, JP Morgan. That's where they get their liquidity from. So they're linked to most of these big investment firms that provide that leverage or the liquidity for them to provide it for you. So yes, basically, for you to own a platform like this, it costs a lot of money. Because yes, so like you rightly said, Bola, you can't just wake up in the morning, create a platform without a link, without a link to a financial house. Yes, you will be able to provide that leverage. You have to be linked to a financial house to provide that liquidity. And they're usually banks, big banks. Any other questions? Okay, good. So there are no questions. I'll let you guys go for breakfast. So like I said, don't play around with the trading plan unless you're sure what you're doing. And if you play around with it, make sure you know what you're doing, you know the pros and cons, because obviously with trading, nothing is ever guaranteed. You could lose money with whatever you're doing. So be careful, make sure you know what you're doing, pros and cons, and then most importantly, monitor what you're doing so that at least you can be objective going forward as to whether what you're doing is good, bad, or indifferent. All right, have a nice day, everybody. Enjoy your breakfast.
Thank you.
Pleasure.
And you